What is the trust tentative taxable income? Okay. So we're going to write this all out. And we're going to have a lot of things on the board. (3-7) tentative taxable income is, what's your tentative taxable income, guys? Starts off at 20,000, right? And what kind of exemption do we get here? 300, right? And that means the tentative taxable income is $19,700, right? That's the answer. Tentative tax. What is the fiduciary accounting income? Fiduciary accounting income here, John, you get the honors. Would you agree? Justin? Why? Aren't we told that none of it under the governing instrument or state law is payable out? That suggests it's principal, right? If you read the problem, doesn't it say that? The entire amount is eligible under the state law or governing instrument to principal.
So it's 0?
So it's 0. Fiduciary accounting income is not taxable income, right? Question C. What is the trust taxable income? What is the trust taxable income? And the question is, will it get a distribution deduction? Will it get a distribution deduction? And do a visual of what the Schedule B might look like. Okay? And what kind of distribution deduction would it get? And John and Justin, you guys should have a handle on this, because what do you get to deduct? What do you get to deduct? Yeah, the lesser of fiduciary accounting income for D&I, right? Isn't that the deduction? Right? Don't you get to deduct under 651 the lesser of fiduciary accounting income or D&I? So here, we're not deducting anything. John, wouldn't it make sense to tax the trust? It's got the money. The beneficiary doesn't, right? So wouldn't it, in this case, the taxable income likewise be $19,700? Because there's no distribution deduction here. And what amount is subject to taxation in the hands of the grantor or sister? Well, what do you think she's going to be taxed on, Dane?
0?
0. She didn't receive a thin dime, right? Right, Jen? Did the sister receive a penny here? So I know you guys are caught up with code sections and whatnot, but at some point you've got to be practical and say, okay, the code should, I mean, it doesn't always happen. We have the, that Mildred case that we looked at and we're like, wow, that's an astounding result. But most times the outcomes should make sense, right? Everyone agree? So, and this time, it does.
Can I just ask? She receives a single item of $20,000 that's ordinary.
I don't know what you mean by single item. I don't.
It says here, the grantor sister receives a single item of ordinary income.
Where are you reading?
3-7 in the fact pattern.
It says she doesn't receive. It says is required to distribute all of its income currently to the grantor or sister that is required to distribute receives a single item of.
The trust gets.
Hold on. Trust is required to distribute all of its income currently to the grantor or sister, receives a single, no, it doesn't mean that she got it, it just means the trust received it.
The trust received it. Okay.
But she didn't receive anything.
It's a trust that is required. It's very confusing when I
It is confusing, but just read it carefully. She does not get a dime. Okay, everyone with me? Everyone can look at problem 3-7 and understand it.
Oh,
Right, Jen, you got it?
yeah. You should put a comma. You can't put comma before that. That's the problem. They have to automatically.
All right, 3-8. We're on a roll. We're on a roll. Okay, 3-8. And V, we're being taped, right, for our missing student.
Yes.
A trust that is required to distribute all of its income currently to the grantor or sister receives a single item of income amounting to $10,000. This item consists entirely of tax-exempt income, right? So now it's income. What kind of income is that, John?
Taxes.
I know, but what kind of income is it? It's fiduciary because there's no adjective before it, right?
Oh.
Right? It's fiduciary accounting income. Everybody agree? Okay? So, let's blow through these questions. What is the trust's gross income? 0. What's my authority code section 103? Right? Tax exempt income is tax exempt income. What is the trust's tentative taxable income? Say again, Alicia?
I would say 0.
You might say 0, but you might also say minus 300, right? Because,
Yeah. Okay.
okay, it's required to pay out all of its income. Everyone agree? So it gets a $300 personal exemption. Agreed?
So what will be the correct answer on the next?
Okay, minus 300 is its tentative taxable income. What is the trust D&I? Don't say it out loud. No one say it out loud. Come up with a number. Pretend it's the exam. Someone's saying, what is D&I? And you're laughing at me because it's such a simple question, you're going to nail this one. What is the D&I here? Don't say it out loud, just write it down. What is the D&I? Javier, what is it? Do you have a number?
I said it was the 10,000.
Hey, great. Karen? What was that? Is that yes?
If you,
Javier, how did you get it?
Well, I mean, I just looked at Schedule B, and we would add back the adjusted tax exempt interest, so it's the just.
So we
10,000.
we start with tentative taxable income, right? Which is minus 300. We add back under 643, we add back the personal exemption, right?
Right.
And then we add what? Tax exempt income, right? $10,000. Everyone agree? All we did was take tentative taxable income, right? We added back the personal exemption plus the tax exempt. Question D. What is the trust fiduciary accounting income? This time, Justin, I gotta go back up to you. What's the fiduciary accounting income, Justin?
In total, sorry, in total, say that again, can you repeat the question?
Just what's the fiduciary accounting income in 3-8?
I'm gonna say 0, it's gonna be paid out.
I'm sorry?
10,000. 10,000, is what I'm saying.
What's the number, Justin?
10,000.
John, agree or disagree?
I agree.
10,000 is the amount that the beneficiary can demand, right? Everyone agree? 10,000 is the fiduciary accounting income. Okay? What is the trust taxable income? And I'll rephrase it. What is, let's start with a premise here. What is the modified D&I? What is we know what the D&I is, it's 10,000. We know the fiduciary accounting income. In question E, what is the modified D&I? Check. 0, right? Isn't it 10,000 less the tax exempt? Everyone agree? What's my authority for this? It's 651B-1. I'll repeat. 651B-1. So the modified D&I is 0, so that gets us back to negative 300. Question F. What is the amount taxable in the hands of the grantor's sister? What is the grantor's sister? Valerie, tax on. 10,000. What's the character, Valerie? Now, just keep in mind under Code Section 652A, the sister's taxable on the lesser of the fiduciary accounting income or D&I. Agreed? She's taxable on the lesser of the two. Agreed? And here, it's the same number, right? 10,000. So the sister here is taxable on $10,000.
But it's all tax exempt income.
Yeah.
And under 652B, it's all tax exempt income, right? And my authority again is 652B, the character passes through, and it's going to be $10,000 of tax exempt income. Okay, we're good?
Wait, I didn't get the last one. Why would you use the $10,000 if it's tax exempt?
That's how much the sister's tax on, $10,000, but she has, under 652B, the same character as the D&I that's distributed to her. If the D&I is comprised all of tax exempt, it's all tax exempt in her hands.
So then why don't you say
So
0?
why don't-
Yeah.
why
and
don't
then-
you
I just
Zero.
meant, she has to report $10,000 of tax exempt income, but it's tax exempt, so she bears no tax.
So if we put
Okay.
0, let's say you ask us the same question on the
Well,
exam.
I hope I would, you would put 10,000 tax exempt.
Okay.
Okay, you
so
want us to
Okay.
specify, as long as we, okay, as long as
So
we.
0 is not the correct answer.
0 or 10,000 tax exempt, I mean,
Okay.
she should report $10,000 and just report as
Right.
tax
Yeah.
exempt
Okay.
income.
Okay.
Everyone's a little bit on edge here. Okay. 3-9. Okay? And you can see, for exam purposes, we would keep it this simple, just, simple numbers. And we're gonna go through a return, you're gonna see, notwithstanding the complexity of some of the course material, this is what I'm looking for. 3-9, The trust is required to distribute all of its income currently to the grantor's sister, receives 2 items of income. 20,000 in capital gain entirely eligible under state law for the governing instrument to principal, and $10,000 in tax exempt interest. The trustee has no discretion to distribute principal. The trust has no expenses. So is this a simple trust? Sure. It has capital gain and it has tax exempt income. Question A. What is the trust gross income? And we'll just go quickly down. Valerie, Shane, what is the trust gross income?
20,000.
20,000. Why?
Mulching capital gain.
Yeah, 20,000 plus 0 has got $20,000 of gross income, right? Question B. What is the trust tentative taxable income? Dane, Simone, what is the trust tentative taxable income?
Not sure.
Simone?
Be 20,000 minus 300.
Absolutely. 20,000 minus 300 or 19,700. On a roll. 3-9. C. What is the trust D&I? So take 2 minutes, everyone come up with a number. Let's see if you guys know your D&I here. Smoke?
30,000.
What's the number?
30,000.
30. Justin, what do you have?
Agreed.
30,000. John?
30.
Let me ask you a question. What's your starting point, John?
Tax exempt.
Say it loudly.
Tax exempt income.
Is that your starting point?
No,
TTI.
TTI.
TTI. Tentative taxable income, right? Is that our starting point?
Yeah.
So Simone, you took 19,700. Keep going. What did you do with it?
Add back 300.
Add back 300. Yeah.
Okay. And then
Anything else, Simone?
Then you add back the tax exempt.
Anything else, Simone? Or are you done?
That's it, 50 and on.
Yeah.
Minus capital gain.
No, that was adjusted DNI, no?
No. You subtract out, for modified D&I, you subtract out the tax exempt. For D&I, you subtract out capital gain. Most times, not always, right? Everyone agree? You gotta subtract out the capital gain. So, D&I is?
10,000.
So you had young mom? All right. Simone, you got it now?
Yeah.
Again, notice how Schedule B, let's get down and dirty in the mud. That if you look at Schedule B, it subtracts out capital gains to compute D&I. When it computes modified D&I, then you'll subtract out the tax exempt. I don't know about you, I'm getting a little bit annoyed at the music out there, but maybe that's me. You guys probably just hear the
I don't
like,
hear anything.
you don't hear anything. It's probably me. But it's like, okay, we're here. I get the party before, but now I may give it 2 more minutes before I run out there. Question D. What is the trust fiduciary accounting income? Oh, I know I gotta go back to John and Justin. What is the fiduciary accounting in here cover? Gentlemen.
30,000. Well, do you
John.
I think it's 30,000.
Why? You're the beneficiary. What can you pound the table on demand? You can't demand the capital gains. Jen, can you demand the capital gain? Don't do that 2 weeks from now when we have the exam where you want to bang your head against the wall. Is it, you know? This again, V would say at the back of the book, the Principal and Income Act, right? Capital gains, generally the beneficiary, income beneficiary has no right to. So the fiduciary accounting, and by the way, if you want to look at the back of the book, the capital gains are considered principal under section 4042. I'll repeat, section, let me just write this out. In problem D, zero capital gain, that's 4042. And 10,000 tax exempt. And that's section 406A for the proposition that it's income. So there's $10,000 of fiduciary accounting income. Question E. What is the trust taxable income? So before we compute the trust taxable income, we need to know what is the distribution deduction, or I'll put it another way. We need to know the modified D&I or the income distribution deduction. That's the last line on Schedule B, okay? We need to know the last line on Schedule B. So we take our D&I, and what do we do to it to figure out the modified D&I? We deduct the tax exempt. What's my authority for that? 651B-1. 651B-1. So therefore, what is the trust taxable income, guys? It's the same as 10 to the taxable income. And does that make sense?
Yes.
Sure, the trust had 20,000 in capital gains, right? (3-9) F. What amount is taxable? Dollar amount, not the character. What's the dollar amount that she's going to be taxed on, guys? The dollar amount.
10,000.
10,000, right? And question G. What is the character?
Taxation.
0, right? Everyone agree it's tax exempt. Or 10,000 tax exempt. Yes, David, either answer would suffice. Everyone good on that?
Can you explain
The what?
the trust taxable income? Are you saying 10 minus 10 to get a 0 reduction?
Yeah, this is tax exempt. This is D&I, and to get the modified D&I, we only can deduct 0. Okay, look at Schedule B, and that's what to get to the income distribution deduction or modified D&I, that's the number.
It's what, 19,700?
Well, the deduction is 0, and that will leave taxable 19,700. And again, guys, take a step back, take a deep breath this weekend, look at it, it makes sense. The trust had 20,000 in capital gains. There's a $300 exemption. You could have eyeballed it before I got in the way of your common sense, and you would have probably said, oh, trust is going to pay tax on $19,700.
All these calculations just make it even more complicated. It's just intuitive if you didn't have to look
I
at that.
understand, but you got to go through this exercise, and then we're going to see how it goes on the return. Okay, so patience. Okay, 3-10. A trust is required to distribute all of its income currently to the grantor's sister. Boy, she's doing all right tonight, right? The grantor's sister receives 2 items of income. Okay, that's not the sister, that's the trust. Okay, just for clarification, right, Jen? Receives $20,000 of ordinary income that is subject to taxation, but entirely allocable under state law or the governing instrument to principal, and $10,000 of exempt income. The trustee has no discretion to distribute principal. The trust has no expenses. So this is a little bit unusual because it's saying that normally capital gain is allocable to principal. Here it's saying the ordinary income is allocable to principal. Everyone understand what's going on here? But let's persevere and see what the outcome is. Okay? So 3-10. What is the trust's gross income? Not a trick question. David, Carlo, what's the trust's gross income here?
30?
Carlo?
I'll go with that.
What was that, Carlo? You go with it, D?
It's 20,
Why?
because it gives 10, it's required to give the 10K to the grantor's sister.
Yeah, but that doesn't matter for purposes, initial purposes of computing, right? The gross income, as a starting point, the 20,000 is taxable, Code Section 61. The tax exempt is not taxable under Code Section 103. So isn't the gross income initially just 20,000, B?
Yeah, that's what I said.
Okay, I'm sorry, but I thought you got into issues of distributions to the system. I apologize. My global point, whatever's being distributed is moot for the moment, right? All right, we may be talking over.
Okay, I don't know, but yeah,
All right.
in my head it was 20, yeah.
20, everyone
Yeah.
agree?
Yes.
20 under Code Section 61, 0 under Code Section 103, 20,000 in gross income, right? Question B. We're back to tentative taxable income. You guys are all experts at this. What is the trust tax tentative taxable income? Shout it out.
1970.
$19,700. Everyone agree? Okay. D&I. Don't say it out loud. Everyone write down a number. Write down a number. DK, you got a number.
Yeah.
What's the number?
30,000.
30? Dane, you agreed to?
30.
Okay, how'd you get that, Dane?
It's the 19.7 plus the 300 plus the 10,000.
D&I is 30?
Yeah, because we took tentative taxable income, right, that's our starting point, plus the personal exemption, plus tax exempt.
What about minus the 20 of ordinary income allocable to principal?
We have no authority to subtract we have no authority to subtract that, because remember, what's my authority for D&I? 643, right? Code section 643. Everyone agree?
Okay.
Does everyone agree? You agree. You can't disagree because it's entitled D&I, right? Everyone agree? It gives you no authority to subtract out ordinary income.
Even if it specifically says it's allocable to principal,
Let's play it out. I hear. Let's see if this works,
That's the
because
hook in this
I
question.
understand. I feel badly. B feels badly. Like something doesn't. Something smells in Denmark, right? Because something seems amiss. All right. So patience, patience. D&I is 30 under code section 643. You with me? Everyone with me? It's a strange trust provision, admittedly. You won't look further on an exam because it's so strange, because this is not how it operates. But let's just go with the authors. They're trying to teach us something here. But D&I is truly 30. Okay? Question D. What is the fiduciary accounting income? 10,000, right? Isn't it 10,000? I know John and Justin were jumping at the bits to say 10,000, right? Alicia beat you to it. She's anxious to get that off her chest. The ordinary income stays embedded in the trust because we're told the instrument says so. So the only thing that that can be paid out is the tax exempt income. So that's going to become the fiduciary accounting income. Gotta say it loudly.
I didn't follow that one. I see the charts, like the ordinary, that's the ordinary interest.
It says the ordinary income is not to be paid out. The governing instrument says that. That's what the problem says. Okay? It literally says that. So it's not being paid out.
But if it was to be paid out, then it will be included.
It would be.
With the $10,000.
It would be, but that's not the issue. Okay? Problem E. What is the trust taxable income? Now, B is curious what the taxable income is. Now, we said D&I is 30. Everyone agree?
Yes.
Everyone agree? D&I is 30. And if you want to, please open. I called it to your attention before, but now it's really relevant. Look at regulation 651B-1. I'll repeat. 651B-1. Remember, I called to your attention the third sentence of 651B-1. Remember, to get to modified D&I, in Schedule B, Jim, what do we always subtract? To get to modified D&I? Exact tax exempt income. Everyone agree? What the third sentence says here, it says take the lesser of D&I or fiduciary accounting income. Take the lesser of the two. And it says then to figure out the modified, subtract tax exempt. Right? Take the lesser of the two and subtract tax exempt. And guess what? What's the lesser of the two? The lesser of the two is the fiduciary accounting income, right? So what this means is that the distribution deduction is ultimately going to be 0. Okay, I repeat, the distribution deduction is going to be 0 when we compute the modified D&I. And what that means is, what is the trust going to be taxed on? $19,700, right, V? Because now you feel better because the trust retained $20,000, right? It retained it.
but if D&I is 30,
right?
Then the beneficiary gets taxed on 30.
Who says that?
No, no.
Don't say that.
Sorry, the beneficiary
The
gets taxed on
beneficiary,
20.
because John will say, no, the beneficiary can only slam his or her, or in this case her, because it's a sister, can only demand $10,000, right? The beneficiary is
So
never,
then why
the
is
beneficiary
David
gets taxed on the lesser of fiduciary accounting income or D&I. The lesser of that. Don't use D&I as the metric to tax. The beneficiary gets taxed on the lesser of the two. And we get a deduction here on the lesser. So therefore, the trust is taxable on $19,700, which, damn it, makes sense. Because it's retaining $20,000. No one should be surprised. Except for V. But even she is not surprised.
I get it now.
Okay? Question F. What amount is subject to tax in the hands of the grantor sister? And I know what you're thinking. It's $10,000. And then question G is, what's the character? And I know David's thinking, is it 0 or is it 10? And it could be both. As long as you say 10,000 tax exempt, right?
Right.
Professor, for problem E, is it most of the time gonna be 0?
I don't know what you mean.
The fiduciary accounting, the modified DNI. This is like the third problem that we're doing, it's 0.
No, I don't want to say that. I don't want to say that.
Okay.
Right? I don't want you to jump to that
So
conclusion.
let's say instead of 0, it was 10,000, then you will take that and add it to,
No, you subtract it from 10 to the taxable income.
okay.
Young Hung.
I'm not so clear about the calculation for E. Are you doing a comparison, like a starting point?
You take the lesser of D&I or fiduciary accounting income. Okay? You take the lesser of the two, that's what we're instructed, and to figure out what gets deducted, actually on the front page of the 1041. This number is the number that appears at the very bottom of Schedule B. The very end, what gets deducted on Schedule B ends up on back again on page 10, on the front page of 1041. I'll show you in a minute. You take the lesser, and this is another way, Young Hung, let me just say, when you get to deduct, guys, is either modified D&I or modified fiduciary accounting income, whatever is the lesser of the two, you get to deduct ultimately on the front page of the 1041. I repeat, most people, and 99% of the time, it will be modified D&I, will be, if you want a generalization, Jen, that I'm willing to do, most of the time, you'll be using modified D&I will be the deduction, okay? And it will be the D&I less the tax exempt will be the amount deducted. In weird cases like this, that's the author's point in having this weird case, is you can use, the regulations instruct you to use the lesser of the two and create modified fiduciary accounting income. Okay, we're on a roll. Keep saying that. Okay? 3-11. Now, so I'm going to leave this here. So after we're done, if anyone wants to look at this, I won't erase it. 3-11 says, calculate the fiduciary accounting income in problem 2-2. Okay? Now, 2-2, go back to 2-2. That's on page 103. Do me a favor, come up with that calculation. I'm going to see if I can get them to turn down the music for 1 second. All right, I'll be right back. Figure out the fiduciary accounting income. actually coming from outside, from next door. The library's having a little bit of a celebration, so who am I to put a damper on Newark Library celebration? I thought it was coming from inside. Okay. So 3-11. Then John, Justin, you have a number. How much?
85.
I didn't hear your number.
85,000.
85. Justin, agree? Simone, you have one? 40,000. Anyone else have a different number? Aaron, you got a number? Just say it loudly. Anyone have a number they're feeling really good about? Shane, you have a number? 118?
140.
140?
138,
You guys aren't instilling a lot of confidence in me.
138. Yep.
Why don't we just, go down 50,000 for the dividend, right?
Right.
Yes.
30 for the interest. Hold on. Fiduciary accounting income includes tax exempt. You gotta add the 40. Right? John and Justin would tell you, you gotta add the 40. It's income under the Principal and Income Act. I didn't ask taxable income. How about the rent?
Yeah.
How about the fiduciary fee? We're told 1,000 is eligible to current income, and property taxes are deductible, right? So the fiduciary accounting income here would be 124. The fiduciary fee and the property tax. Make sense? I hope so.
Yeah.
3-12. Let's calculate the taxable income.
Remove the New York City.
Well, you remember, this is the tentative taxable income right here. We computed this, right? If you guys remember, and that's why in problem 2-2, we computed the tentative taxable income to be 83,200. Look in your notes. We computed this already. So, given this is tentative taxable income, what is the D&I?
You add back
Add back the $300.
40.
And
The tax exempt.
and the tax exempt, so it became 123, right? Everyone agree? D&I is 123. So we have the tentative taxable income, and we have the D&I, right?
No. 83.
Yeah, we have this.
84. And fiduciary. Otherwise we
So what is modified, given that this is tentative taxable income, this is D&I. What is modified D&I?
83 to 80.
Say again?
83 to 80.
83, 280, which is, let's talk about this. Modified D&I is for D&I, we have D&I, let's do this again. D&I is 123, right? And we have to subtract out 39,420, right? Which is the net tax exempt income. Everyone agree? which is 83,580. Everyone agree? This is the modified, I'll call it the income distribution deduction or modified D&I. This is D&I less the tax exempt, right? This is on Schedule B. Just going back to your Schedule B, let's just look at Schedule B again. If you look on line 7, this is D&I on line 7. And then if you look at the schedule, it says immediately after line 7, because I want to find it.
I thought it was 40,000.
Line 12.
No, because.
Line 12, it says enter the amount of tax exempt. Okay? So this is where you would subtract it out, and this number is line 15, very important number on Schedule B in the Form 1041. This is the amount that gets deducted on the front page of the 1041. Now, remember from our prior problem, right, that we just did, don't we have to take, so we get modified D&I, everyone agree? And this becomes our deduction, agreed? This is on Schedule B. This is the final number. Hooray, we got there. But don't we have to get the final number of modified fiduciary accounting income? Remember that we just did that. We have to take the lesser of the two. And what is the modified fiduciary accounting income?
You add back the 300.
Okay, hold on 1 second. We start off with 124, right? Isn't that the fiduciary accounting income? Now, we don't know what the fiduciary accounting income, we don't know how much is tax exempt. Right? Don't we have to subtract out the tax exempt from here? Everyone agree? We have to subtract out the tax exempt. And the only way to figure that number out is as follows. That's an unknown. We don't know how much is tax exempt to the 124. But we do know this ratio. We know there's 39,420 of tax exempt over 123,000. This is D&I, this is tax exempt, right? Isn't there a ratio of tax exempt over D&I? And we can figure out then by using this ratio how much is considered tax exempt for purposes of, if you solve for X, the number here is 39,740. If you solve for X using your calculator, that will become X, which is the net amount of tax exempt income for fiduciary accounting purposes. Remember, that's the third sentence I read in the regulation. You take the lesser of D&I, or fiduciary accounting income, and you subtract out the tax exempt income, and whichever one is smaller is the one that becomes deductible on the tax return. Well, this number is 39,740, that's the tax exempt. And the modified fiduciary accounting income is this number. Which is smaller? We just went through an exercise, and Jay, you'll be glad to know that again, most of the time, it's modified D&I. That will be the number that's ultimately deducted. This number is the modified fiduciary accounting income. Modified fiduciary accounting income. And we just use this ratio right here just to figure out this number. What is the tax exempt portion? So anyway, this number becomes the deduction, right? This number becomes deductible, and it's deductible against the tentative taxable income. So ultimately, what's going to be, how much is the trust going to bear tax on, guys?
-300.
Negative 300, because there's no capital gains, right? Jen?
I was just a little lost with how why didn't you use 40,000 for the tax exam? And you used
Because you
the
got to
amount?
use the net amount. Remember that some of the expenses are allocable to tax exempt income.
Oh, because we had expenses, then
Right.
that's why we have to perform these calculations.
Yes.
For the, okay.
Remember, this is manufacturer's Hanover. You don't get all the deductions.
Okay.
And some of those deductions are allocable against tax exempt income.
Alright.
So you actually have to, because I was under the impression that you chose, first you figure out what's your DNI or fiduciary, and then you deduct, but you have to deduct two different tax exempt.
In theory, you're supposed to deduct two different tax exempt numbers. Let me just keep going through this. 3-13 says, calculate the amount subject to taxation in the hands of the beneficiary of the trust in 2-2. Now, what is the fiduciary accounting income?
124.
124, right? 124. What is the D&I? 123. What is the person going to be taxed on, guys? 124 or 123? 123. You get taxed on the lesser of fiduciary accounting income or D&I. What's my authority? 652. 652. So, and that makes sense. The person's getting 124,000. D&I is 123, so they're getting a $1,000 amount of principal, right?
So it's lesser of DNI or,
Lesser of D&I or fiduciary accounting income. Now here comes the most fun. So you think you've been having fun? Now comes the most fun. 3-14. What's the tax character of the amount calculated in 3-13? So, and this is straight from the regulations under 652. This is the example I told you should spend 20 minutes reading. We have dividends. We have Chrysler interest. We have New York City interest. And we have Old McDonald rent. Old McDonald rent. We have these four categories, right? And we had 50,000 of dividends. We had $30,000 of Chrysler taxable interest. We had 40,000 of exempt. And we had $20,000 of rent, right? These are items. And now, how are we going to allocate the trustee fee? How much was the trustee fee? $2,000. Everyone agree? And if you remember when we did our fraction, remember under manufacturer's Hanover, and we did the numerator and denominator, and we saw that a certain portion was disallowed? If you recall, that number was $580. That $580 must be allocated to the tax exempt. Okay, that's the trustee fee, right? That must be allocated to the tax exempt. That, my authority for your notes is regulation 652B-3B. I'll repeat, 652B-3B, that we must allocate this to tax-exempt income. What about the balance? What about the trustee fee? The balance of the trustee fee? The remaining of the $2,000 is another $1,420. Where can we allocate that expense to? Anywhere you want. What's my authority for the proposition anywhere you want? 652B-3B. I'll repeat. You can allocate indirect expenses. This is an indirect expense. Once you allocate it to the tax exempt, you can allocate it anywhere you want. And most people are not going to allocate it to dividends because dividends get preferential treatment. They'll allocate it to the trustee fee. They'll allocate it to the taxable interest, right?
Yes.
What about the property tax? Where does that get allocated to? Say again? To the rent, right? Because that's a direct expense, right? That's a direct expense, and Regulation 652B-3A, I'll repeat, Regulation 652B-3A, say direct expenses have to be allocated directly to the income that generated them. So where does that leave us? That leaves us $5,000 of rental income, New York City, $39,420. Chrysler interest, $28,580. Dividend income of $50,000. And what do you think the total of these four numbers?
123.
123. That's the maximum we can be taxed on. This is going to all add up, if you do it, guys, to 123. No, that's what she's going to include, Jen. That's what she's including. This is inclusion. On her K1, it's going to be showing 50,000. Each one of these will be broken down under the Form K1. And on her Form 1040, the sister will report these four categories of income.
And the software will do it in 5 minutes.
5 seconds.
Well, including it.
All right? But what we're going to do, so let's make sure we're all on the same wavelength, because this is a lot of information to absorb, but if you can see, the problems that I would ask are very similar to this. Very simple in nature. We're not going to be over the top, right? And I will, for next class, let's talk about this. We're going to begin a discussion of complex trusts, and we will notice the difference on how they are taxed and the separate share rule. And there's a set of problems that go on to page 187. And we will also, there is a problem 2, which, like I said, that is outlined here. Try to figure out for yourself. Very simply, I helped you by showing you what's disallowed and allowed, right? Try to compute that yourself. Like, pretend you don't see my handwriting here, and try to hide it. Hide the answer from yourself. And then we'll go through this together because I want you to see next class how to do a Form 1041. And then let's also consider looking at problem 3 here, because problem 3 has a capital gain in addition to, problem 2 has no capital gain. Problem 3 has a capital gain. And then, time permitting, maybe, we'll get into maybe looking at one complex trust. But I think by going through this, and we're not going to go in detail, I just think it'd be useful for you to see how these things, problem 4 is a complex trust, like how these things play out on a tax return. But fear not, I'm not going to ask anyone to take these numbers and do an actual tax return, but by seeing it, I think it's a great use for you to figure out, hey, look at Schedule B, because on the exam, what does he mean by modified DNI or modified fiduciary accounting income? It's very useful. All right, so a lot of work tonight, guys. Read to page 205, please. And make sure you bring this with you. I may not have extras, so make sure you bring this handout. All right, so we'll see everyone on next Wednesday. And then remember, exam is in 2 weeks, so just bear that in mind.